Hey everyone, Jeff Dorman, CIO of Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset market. And I am pleased to be joined by Ilan Solot this week, who is the co-head of digital assets at Marex Solutions, which is effectively, tell me, specializing in distribution of customized derivative products across both TradFi and crypto. Is that a fair assumption?
Yep.
Okay.
That's definitely the solutions part of it. The big company does a little bit of everything. We're very well known for commodities, but we do a little bit of everything. So
Fantastic. Well, as most of you viewers know, I write a weekly blog called "That's Our Two Satoshis." You can find it on our website, ar.ca backslash blog. But if you don't know, Ilan writes something not in the same cadence, maybe not every week when you have something brilliant to say, but I think it's one of the best write ups that are out there. So for those, I don't know if you want to tell people before we get started how they can even sign up for your. Actually, we'll do that at the end, but I definitely make sure that you're signed up for the Marex Digital Assets write up, because it's probably, in my opinion, one of the most impactful and well written both crypto and TradFi market commentaries that I read. So first of all, welcome and thank you for joining.
it's been a pleasure, and I'm super excited to be here. I'm a big consumer of your content as well, so I think we're on both sides of the aisle here. So
Well, great. Well, let's get into what's happening for the week. You know, I think everybody came into the last 3 months of the year here expecting some sort of rise in October. Quite frankly, I'm not even sure where October came from, since if you look back the last few years, it's not like there's any real consistency to October. Maybe on average, the fourth quarter is better than other quarters, but it's sort of a weird meme that everyone just expected us to go higher. That said, a lot of tailwinds right now to the market, and wouldn't be shocking if we go higher here. Maybe not before the election, but certainly after, if we're following a pattern of 2020, where basically the entire world was on pins and needles heading up to the election, not necessarily caring who got elected, but wanted to make sure there actually was an elected president and there was going to be a peaceful transfer of power. And then equity markets, crypto off to the races November and December. Do you
yeah.
expect something similar here, or what are you seeing in the overall kind of macro crypto land?
I think I'm a little bit, my mind's a little bit like yours. I really downplay the cyclicality of it. First of all, I mean, the sample size is like teeny, right? And many of the years in the past have big distortions and COVIDs and all kind of stuff. So I think I don't really put much importance there. But I do think that the setup was detrimental, really. I think there was a lot of leverage that came into October ending, like people preparing to end September bullish, and I think that set up a bad October, to be honest, at least the initial part of it. So I think that in terms of positioning, it was unhelpful. But I don't think there's anything specific about October that should drive markets higher. I think we are in a better place right now in many ways. The supply story has already been largely digested, even though there's always a little bit more. And I think the election situation, again, for me too, I take a more of a neutral approach to it. I don't think a Harris government would be as bad. Obviously, Trump would be better, but I don't think they'll be that detrimental to crypto. So I think it's now more of internal dynamic of where markets rotate in crypto, and we need to see a little bit of inflow inside to the system and of the ETFs and in other sources. So.
Well, yeah, that's sort of the problem right now, is that there really is no inflows coming into digital assets right now, right? Whether you run a liquid hedge fund or you're just looking at ETF flows. I mean, the only money that's possibly coming into crypto right now is through the Bitcoin ETF. And maybe you get a little bit of a shot in the arm with some of these FTX repayments. I mean, don't listen to what you're reading or seeing. There's not $16 billion coming back into the market, right? The plan is a $16 billion from the FTX estate going back to creditors, but at least half of that is owned by distress funds who are traditional distress funds. They're not putting
Yeah.
that money in crypto. A lot of that is not coming back into the market, but maybe a billion, 2, 3 billion makes its way back in the market, which is significant. Given the just lack of inflows that we've seen in general. But the issue is that almost all the money comes into Bitcoin, and then you're really just relying on leverage or sort of a trickle down effect to the other areas of the market. That being said, you can see how impactful even just a little bit of that inflows can be, given some of the price moves we've seen just in the last, call it 3, 4 weeks. You're starting to see some real dispersion, starting to see a couple, 100% gainers here and there. Things like BitTensor and AI, or things like, SUI or SUI, however you want to pronounce it, in the data availability layer 2 world. But ultimately, like you said, it's just we're not really going higher until you see material inflows. And if that's really just coming from Bitcoin, you have to wonder, like, are there, what are the catalysts that would send Bitcoin higher right now? And we saw it last week, another negative reaction to a geopolitical risk, this time with the launch from Iran to Israel of, I think, 180 missiles. This is like, I know you and I share this view, but I mean, this is just foolish. Every time we hear that Bitcoin isn't a safe haven because it went down when gold went up and equities went down during some sort of a geopolitical crisis. But this always happens, right? I mean, Bitcoin never responds favorably to market events. It only responds favorably as a safe haven when you see something involving a government or a bank, right? If you see a
Yeah.
loss of faith in a local government or a local bank, I mean, that is every single time we've seen that, whether it's the Cyprus banking crisis or the 2019 Chinese tariffs or the Canadian trucking standoff in 2022 and the 2023 U.S. regional banking crisis. I mean, anytime something happens to a bank or a local government, that's when Bitcoin rises. You don't see it rise when there's just an equity sell-off or a geopolitical event. So again, like, if you're bullish on Bitcoin here and you're looking for inflows in the market, like, what do we put our hat on? What can people expect if we do have a fourth quarter?
Yeah, I mean, first of all, I mean, just to kind of echo in a different tone what you just said, I think it's almost unhelpful, to be honest, that this association of Bitcoin with safe haven and this search for correlations and so forth. I think it really is oftentimes just a question of time frames. I think people are looking at very short time frames, and the narrative is basically creating itself for Bitcoin. And my fear really, it becomes self-fulfilling. And there's this kind of, oh, Bitcoin is down when Nasdaq is down, and suddenly that becomes, and just nudges Bitcoin closer and closer to this, like, just one more risk on or leverage asset, where I think it ignores more the bigger potential of Bitcoin and what it can be as a more differentiated asset in a portfolio. And it has characteristics that are some shared with gold, some shared with risk assets, but it is a differentiated asset. And I think what gets missed is that, and I suspect it's a question of time frame, the fixation and short-term time combined with, in my opinion, as I wrote in my last piece, I think part of the blame is just way too much leverage in too early of a stage of an asset class, and
Mhm.
the volatility just becomes too big, and there's a lot of, like, inexperienced people taking too many big bets, and it just gets a little bit too crazy, and all that gets confused, and the narrative gets diluted. And you have these commentaries, you go outside, and you say, oh yeah, it's not a safe haven because gold went up and Bitcoin went down, and I just think that just framing is unhelpful, really.
Yeah, and I think, again, you have to define what a safe haven really is. A safe haven is not an asset that never goes down. A safe haven is
Yeah.
an investment that's expected to retain or increase in value during times of some sort of turbulence, right? More literally, safe haven is defined as a place of refuge, right? So, U.S. Treasuries can lose substantial value when rates rise, but few would ever argue that U.S. Treasuries aren't a safe haven. Like, everyone knows it is, right? Similarly, protecting your assets against a corrupt government or a failed bank, that can be viewed as a safe haven. So it's not that it isn't a safe haven; it's that you have to define what type of
Yes.
refuge. What are we seeking refuge from? We're not seeking refuge from equity market declines. We're seeking refuge from loss of purchasing power, loss of freedom with banks and governments. So it's just not, you can't just slap a label on something and say it's digital gold and then expect it to behave exactly like digital gold or exactly like gold. As you said, it's sort of spurious correlations with different asset classes.
But this is why I think that even though that obviously we can appreciate the nuance, I think that the safe haven narrative is unhelpful in the end, because there's just no way to escape that in the discourse. Like, I speak to people all day long that are not involved in crypto space, but they're interested and they're curious, and for me this doesn't help, and it's just not the really way. I think a more interesting way, in fact, BlackRock had a big piece that they kind of portray this way, is this differentiated asset, and thinking of it as an investment asset that can go up in price and has qualities that can protect you against inflation and all that. But that framing, I think, is really not helpful anymore. I actually thought in the past it could be, but I've kind of abandoned it. For me, it's just easy, even though, again, the nuances, we can discuss it and understand it that way, but I just, yeah, prefer to stay away from it.
So you mentioned obviously that crypto is a high vol asset, and historically that's been true. But one of the weird things in the last week is that we've now seen the VIX explode higher by 20% or more in a day 3 times in the last 6 weeks, including, obviously the early August implosion where the VIX rose, almost 200% in a matter of days around the yen carry trade unwind. But you've seen this sort of vol explosion a little bit in the traditional markets. Even the MOVE index, which measures, treasuries, pretty volatile recently as well. Meanwhile, Bitcoin and ETH vol just continue to get hammered.
Mhm.
And actually, it's interesting. A lot of the desks right now are pitching everyone to buy short dated calls because they're just getting hammered by vol sellers and they're trying to unload it. But the thought process that you mentioned about the election is that it's not, even though the election outcome at this point is sort of a 50-50 toss up. If Kamala Harris wins, it's probably not taking the crypto market down as much
No.
as it will go higher if Trump wins. So I'm
Yeah.
surprised that there's not more call buying. I'm surprised there's not more of a bid for volatility. Anything that you're seeing right now that helps explain why crypto vol is dying while the rest of the world is exploding here ahead of the election?
Yeah, it's a great question. I mean, the skew, I think, is obvious to everybody, right? I mean, it is exactly as you said. The upside if Trump wins is big. If Kamala wins, is probably the downside is limited. So it's a very favorable skewed bet. I think that what explains partially the difference in the vols, like if you look at the MOVE index or the VIX and what it bounced and in crypto not, I think is a bit of the starting point. I think both the VIX and MOVE were a little bit like coiled springs because there's already so much pre-selling happening and in this environment of low volatility, then it gets shaken up quickly. But it retraces very fast. So I think I don't expect the moves higher in general vol indices to remain. For Bitcoin, I think you're right. I think there's a whole cohort of people in the crypto industry that are vol sellers in many different ways. And we do some of this in some ways in turn for in via structured products. There's all kinds of shops who do it. And I think it became very much kind of part of the of the cohort of investors. So I think it's kind of natural. It's the way the market is developing. But it's all in its infancy, in my opinion. Like this is just like a snapshot in time, and I think it's just going to change still quite a bit. And my hope is that vol structurally declines, at least for Bitcoin.
Yeah, and going back to the traditional markets for a second, I mean, it's very strange when you see these sort of VIX implosions and these volatility spikes, especially when you have like high yield and investment grade OAS at basically 5 to 10 year tights right now. I mean, there's nothing flashing right now that indicates any sort of a
Yeah,
panic,
yeah.
but you're seeing these sort of flash panics in the volatility market. I think it's just my assessment from talking to other funds and just my own history in the markets is you just have this period where nobody really fears downside because you've had essentially really, other than I guess a little bit of a blip in 2020. I mean, for the most part, for the last 15 years, you're just going straight up, and
Yeah.
any real market crash has been like 2 or 3 weeks long. It hasn't been these 6 to 12 month crashes. And as a result, everybody's just all in the markets. Everybody's over levered, and they're using anytime they see any sort of a hiccup in the market, whether it's the yen carry trade or something else, they're just immediately rushing to puts. And that makes sense, right? The traditional markets care more about protecting that downside, whereas in crypto, usually it's the opposite, right? Most of the time, people are looking for that upside bet, but you need a catalyst for an upside bet. And I think that's the real issue right now is that all of the catalysts in 2024 have been macro related. It's been
Mhm.
what happens in the election. It's been what happens with an ETF. You're just not seeing those crypto specific catalysts that we're used to seeing. And I've come to the realization now. We've been doing this for a long time, and we're in our 7th year managing other investors' money. Not to mention everybody at Arca has been doing it on their own for longer than that. Um, I'm at the point now where I almost think it's a binary bull case, and what I mean by that is it feels to me like we're not going to go that much lower in the crypto markets. It feels very similar to me the end of 2022, where it was easy to point to the fact that we're near a bottom of the market, but I didn't know what the actual catalyst to the upside was going to be. I feel sort of similar here with the way the macro is setting
Mhm.
up, with the way the election is setting up. I feel like there's a bottom to the markets right here, but I'm having a hard time identifying the upside. And the only thing I keep coming back to is that the blockchain technology as an infrastructure works really well, but in order to get billions of users into this ecosystem, you really do need a regulatory change where all of a sudden Web 2 and TradFi and all these other areas that already have millions and millions of active users just all at once come into the ecosystem and start issuing tokens and start using DeFi and start participating in this market. And outside of that, I just don't see that upside catalyst. And I'm curious what you
Yeah.
see right now, if you share any similar view.
Yeah. Yeah. Okay. Allow me to take a zoom out here. Let's take a really big step back to the I think where the essence of your question. So if we really zoom out, and I think when people say zoom out, I don't think they really, what was this cycle? What happened in this cycle? The way I like to think about it is like this: we replaced existential risk for irrelevance risk. So since you started crypto, I'm sure same as me, most of my concern was about waking up in the morning and this thing being regulated away, or Tether blowing up, or like DeFi being banned, or something. It was existential. Like I really did not know for years if this industry would survive, if it would be something. So I grew up with that. But this cycle is different. This cycle, that has gone away. Nobody in their right mind thinks that crypto is going to go away or going to be banned or going to disappear. The fear now is of irrelevance. So it's a concern of, will we deliver something of value, of use, of usage, and or growth. So the analogy that I made usually with my people I talk to in traditional markets is compared to emerging markets. So when I started my career at the New York Fed trading desk, emerging markets were like super big, right? You walked into a meeting with a PM and people will tell you about like the monetary policy in Turkey, political parties in Brazil. They understood what Indonesian bonds, like people are interested in it. They're investing in
Everybody
it.
cared about the BRICS, even if you weren't an emerging market guy. So
Everybody cared. You remember exactly the BRICS. Everybody knew about it, cared about it. They paid attention to it because it has potential. People expect. I'm from Brazil originally, so I'm even closer to that. I expect people expected huge amounts of growth coming out of it. But what happened in the last 15 years? Nothing. Look at the MSCI versus even the European equity index. It did nothing. So you walk into a meeting today, and people like nobody really cares so much. Like, there's some special events. People go, oh yeah, India does a good trade here, China impacting commodities. But EM as an asset class just did not deliver. It became kind of irrelevant. Like big portfolio managers, they want to think about Nvidia, about all kinds of AI trades, or how we're going to allocate to gold here or there, or we're going to do different plays, interest rates. But emerging markets doesn't feature that much. And my concern, sorry, my voice is dying a little bit. My concern, though not my base case, is that yeah, the crypto could eventually just not deliver in the potential it has. So this existential risk became growth risk, became irrelevance risk. That we could just become like just one more like little group of people like that trade bonds there somewhere in emerging markets, but we don't really feature in the big investment committees. It just became like a side gig. So this is the risk for me, and I think this goes into the core of the question, really.
yeah, that's a great line. Existential risk versus irrelevance risk, and you're absolutely right. I mean, I can go back. I remember being interviewed in 2018 or 2019, and somebody asked me like, "What do you think the biggest risk is?" And I basically said there's two big risks, right? One is that we're even more right than we think, and something terrible happens to the world where you need to own your own bearer asset like a Bitcoin or an Ethereum. But two is that this technology is just not as impactful as we think it is, right? It was never a risk of the technology not working. It was never a risk of crypto not growing. It was really just that we were pricing in I don't want to say revolutionary industry, but certainly an evolutionary industry that should kind of take finance and money and asset raising and capital formation to another level. This evolutionary system that we all see just might be a dud and just not right. It's fine. It works. It's just not as big. And the BRICS is a really good example for those who don't know that. That's Brazil, Russia, India, China. That was the real kind of growth engine in markets.
But
Call it 10 to 15 years ago, and everybody was talking about the BRICS. Everywhere you looked, it was talking about the growth in the BRICS. And you look at a chart as Ilan just mentioned, and it didn't happen. It wasn't that they didn't grow; it's just they didn't grow anywhere near as much as everyone thought, and got destroyed by just the multiple expansion in U.S. equities, especially in the technology sector. So that is a real risk here, and again, that's why I come back to this binary outcome here, which is we now know it works, right? 5 years ago, we weren't 100% sure it was going to work, or even if it did work, it wasn't scaled properly. We now know it works. We now know it scales. We now know there are certain use cases that really work, like stable coins and DeFi, and even to some extent, maybe DePIN and the intersection of AI. But it's not enough to just grow with crypto native growth. Like at some point, you need the rest of the world to care. And if they don't care, you just don't get that immediate onboarding of hundreds of millions of users. I mean, even some of the best successful projects in crypto, we're talking 2, 3, maybe 5 million users, not not hundreds of millions and billions, which is what you need. So I think that's sort of, in my mind, that's kind of what we're set up right now. Is that you have a great macro tailwind, you potentially have some great political and regulatory tailwinds. It's set up well, but you're almost going to have like this Big Bang Theory kind of start from nothing event at some point that's going to all of a sudden unleash the, you know, corporate and kind of Web 2 world that all of a sudden just starts onboarding into the space and starts using some of this cool technology that exists. So until then, we kind of wait.
But could be, but there was a scenario in which we have just like a handful of like scale projects. Maybe like that, maybe like we have 1 or 2 games that actually have decent track records, like Polymarkets. We have 1 or 2 deep in things that actually work. Doesn't have to be, dominate the world, to be household name. They could. There's no big bang, but there's an organic growth of many pockets, and then industry kind of develop. You have Solana, maybe Sui finds a niche somewhere, maybe like Avalanche, new game coming out, whatever's takes off, and so you could have that scenario as well without a big bang, just the whole respectable size projects.
Yeah, I hope you're right. I think that would be great. The problem is, what we've learned with the technology boom of the last 2 decades is ecosystems matter, right? It kind of matters where you spend your time and what your workflow is. Like, there's a reason why Microsoft products worked for so long, is because they all worked really well together. There's a reason why Google products all work well right now, because they all work really good together. It's easy to go from Gmail to Google Sheets to Google Slides. There's a reason why Apple iOS works so well, right? Because it's like, maybe I'm not a gamer, but I'm already using my iPhone for other things. And, when I hear about a game, it's just easy to download the app and play it, right? I think the problem with what you're describing is, while that could happen and you could have just sort of this scattered world of mini success stories, you still need to onboard people into crypto, right? They have to have a wallet. They have to be comfortable on chain. And I think it's really unrealistic to think that people will change their workflows so much and just have these sort of scattered one-off opportunities that aren't part of a larger, workflow and ecosystem.
Yeah, well, I wonder, like in that case, maybe I'm a little bit more hopeful than you. I really think that we're not too far from completely abstracting things like gas and wallet experiences. I mean, even as something, for example, a friend of mine was showing, IMX games, they have this thing called Passport. You just use a Google account to log in, and you create an account in GMX using Google. You don't have to you can see there's a wallet, you can buy funds there, but it's a very Web 2 experience already, just in that that little window. And I'm a little bit more hopeful that the user experience will catch up. I think it's more finding projects that are actually interesting, and I hope that the first scenario you described is the one that happens, a big bang, and everybody's like, yeah, like this I'm gonna go. But for me, it seems more likely from where I stand now, is that we have several important projects. I mean, Polymarket is a really important project. It's as I said, if we have 10 of these, okay, crypto is a success for me, honestly. This is like everybody talks about it, everybody quotes it. Everybody knows about it. People who aren't crypto maybe don't even know it's crypto, but they know it is. So I think I'll be happy with that, at least in the next couple of years, if I get 10 Polymarket scale projects.
Fantastic. Well, listen, Ilan, we're definitely gonna have you back on. I think we're bumping up on time here. Leave the viewers with how to reach you, how to sign up for your email, anything else you think on the markets as we approach the next couple of weeks here.
Yeah, so my list is somewhat kind of a closed list, but obviously for your followers, everybody can join. We can. I think it's probably best if I create a link in your description. I can add there, or I'm in Twitter as well. You can find me in Twitter, Solot. But that's probably the easiest way. And just send me an email if it trails to you guys. Obviously, you get into the list. So no worries about that.
Terrific. Well, thank you for joining, and obviously for everyone else, you can get our blog. We also wrote, for those who are interested, we wrote a lot about BitTensor this week as well, trying to explain
Great post.
I like to explain things in simple terms. I have 75-year-old
helped
parents.
me a lot. It helped me a lot, to be honest. I'm very interested in BitTensor, but your piece is the one that I forwarded people. So look, finally, I tried to understand it. Here it is. So yeah, it was great.
Yeah,
Yeah.
I pride myself on trying to dumb down complex things to the masses, and I often talk to my
Perfect.
parents who are
Yeah.
55 and say, "Do you understand this?" And if they understand it, then I know that I'm onto something. But you can check out our thoughts on BitTensor and why we think it's so such an impactful project on our website ar.ca/blog. Read That's Our Two Satoshis, and again, we'll have Ilan back sometime in the next couple of weeks as well. And that's it for this week. So we'll be back next week with a new guest. Ilan, again, thanks for joining,
A
and we'll talk
pleasure.
to you next week. Thanks, everyone.